The Iraqi Dinar Today latest news. The global financial community is currently focusing an unprecedented level of attention on Iraq, as a powerful combination of international institutional forecasts, key movements within the global Forex landscape, and significant domestic economic reforms appear to be converging on one central, electrifying possibility: the long-anticipated revaluation of the Iraqi dinar. Across every major financial news desk and within the specialized world of currency trading, the volume of discussion is rising, propelled by more frequent official reports and quiet signals that Iraq may be approaching a watershed moment. This potential turning point could fundamentally redefine not only the value of the Iraqi currency but also the entire economic structure and geopolitical balance of power across the Middle East. Our focus today is on meticulously unpacking the intricate details of what is unfolding behind closed doors, deciphering the technical and diplomatic signals emanating from influential international bodies, and analyzing how precise political timing is expected to dictate the ultimate moment of change. Whether you are a veteran observer of complex monetary transitions or a newcomer simply trying to grasp the next major global economic shift, the constellation of financial clues appearing right now demands close scrutiny, as they are likely shaping an imminent and profound market adjustment. This intricate story finds its beginning not in a spectacular announcement, but in the seemingly routine yet ultimately turbulent fluctuations of the global oil markets this week. Following an unusual period of initial calm, analysts are pointing to mounting concerns over oil oversupply and a noticeable softening in demand from major economies like the United States, trends that are collectively pushing crude prices toward their second consecutive weekly decline. While such movement might appear to be nothing more than standard market volatility on the surface, experts are connecting these price changes to much deeper, ongoing strategic energy negotiations that involve Iraq, the United States, and the emerging influence of China. It is crucial to understand that every single shift in international oil pricing has a direct and immediate impact on the revenue stability of Iraq, which in turn fundamentally influences the potential for its currency to be strengthened. Given that Iraq's entire national economy remains highly concentrated and heavily reliant on the consistent export of oil, even the slightest movement in crude prices creates a significant ripple effect across its broader monetary and fiscal policies, necessitating constant strategic recalibration. Sources close to the ongoing diplomatic discussions indicate that beneath the public headlines and market noise, the Iraqi government is diligently and quietly working to align its long-term fiscal strategy with what is being described as a new, highly collaborative era of international economic partnership. This sustained preparation is widely viewed as the essential groundwork for a substantial currency adjustment, one intended to finally allow the Iraqi dinar to reflect the nation's genuine underlying economic strength, rather than the artificially suppressed valuation it has been held at for several decades, following a series of conflicts and sanctions. In the past few days, the intensity of high-level political dialogue between major global powers has noticeably reignited speculation about the final stages of Iraq's comprehensive financial roadmap. Key reports have surfaced detailing informal, yet highly consequential, delegations from the United States engaging with their counterparts in Baghdad to specifically discuss future energy cooperation deals and the critical infrastructure for trade settlement mechanisms. Seasoned observers of this complex process assert that the true significance of these high-stakes discussions extends far beyond the typical subjects of oil quotas or national security arrangements. They are, in essence, focused entirely on the full and secure integration of the Iraqi financial system into the transparent global financial architecture. Furthermore, behind the guarded perimeter of governmental transparency, covert technical updates have been progressively implemented across various international Forex networks, providing subtle yet compelling evidence of a deeper technological synchronization of Iraq's central currency data with the world's leading financial platforms. While the Iraqi dinar itself has not yet achieved visible status on the public trading terminals utilized by international investors, market insiders are quick to dismiss this absence, describing it as a perfectly normal and expected final stage in the digital onboarding process of any major currency. This intricate process involves meticulously preparing the back-end systems for universal trading before the official, full-rate visibility is ultimately released to the public domain, suggesting that the foundational groundwork is now virtually complete. The pervasive consensus amongst those who are diligently tracking this highly sensitive transition is that the pivotal element now determining the final launch is political timing. It is a calculated consideration of how and when all involved major nations, including Iraq and its most powerful global partners, can orchestrate the announcement to ensure each appears to be a clear and undeniable winner on the international diplomatic stage. This concept of political optics has, in fact, rapidly become the most frequently debated and discussed phrase within specialized investor and geopolitical circles, a term used to describe the strategic synchronization of major financial decisions with pivotal diplomatic events, planned public announcements, or internal political milestones. Crucially, this signifies that while Iraq and its partners may have long ago achieved complete technical readiness for a major currency rate adjustment, they are deliberately holding the line, patiently waiting for the single, most advantageous political moment to unveil this massive shift to the world, maximizing its perceived positive impact. Experts who specialize in these types of complex, coordinated global events suggest that a forthcoming significant regional conference, in addition to carefully selected internal Iraqi milestones, such as the precise timing of national elections or important national holidays, could very well serve as the decisive factor that influences when this highly anticipated window of opportunity is fully opened. For the broader global financial markets and the traders operating within them, this political choreography translates to one simple, unavoidable truth. Regardless of how technically prepared the Iraqi central bank and its partners may be, the final trigger that initiates the monumental change is overwhelmingly likely to be diplomatic and political in nature, rather than purely economic. Many who track the subtle indicators believe that everything from the precise scheduling of International Monetary Fund, IMF missions, to the conspicuous, high-level silence maintained by the Central Bank of Iraq, CBI, is a deliberate, synchronized component of this overarching strategic choreography, designed to manage both the timing and the global perception of the impending event with surgical precision. While these critical, behind-the-scenes negotiations continue to dominate the high-level diplomatic sphere, intriguing and highly relevant data points emerging from the Iraq Stock Exchange have begun to capture fresh attention from market analysts. Recent reports have indicated that weekly trading volumes have consistently reached nearly $4 million in total share transactions. While this figure remains comparatively modest when measured against the colossal standards of major international exchanges in New York or London, analysts emphasize that this consistent, measurable level of trading activity is a powerful and irrefutable signal of continuously growing domestic economic confidence within Iraq itself. Crucially, investors operating inside the nation are demonstrating a sustained and renewed interest in purchasing and holding local equities, a behavior that strongly suggests they are actively anticipating significant financial stabilization and, quite possibly, a major currency revaluation in the very near-term horizon. Historically, in other emerging economies that have successfully navigated the path toward currency recalibration, a pattern has been repeatedly observed: a significant surge in internal market confidence, particularly when it precedes a widely rumored monetary shift, frequently acts as a reliable precursor to broader official announcements. While this current uptick in stock exchange activity is certainly not absolute, irrefutable proof of an immediate change, it aligns perfectly with a behavioral pattern that veteran market watchers have seen before in nations successfully preparing for a fundamental shift in their national exchange rate. This phenomenon of local investors betting on their own market's future stability is a psychological indicator as important as any technical metric, suggesting that a pervasive sense of economic momentum is building from the ground up, entirely independent of the official statements and external pressures. Adding another important layer to this comprehensive economic narrative is the performance of gold and the status of global reserve assets. In recent financial cycles, the value of gold has experienced a noticeable rise, a trend driven largely by weaker than expected U.S. job data and the increasing market expectation of a potential future rate cut by the powerful Federal Reserve. This development provides indirect yet substantial support for Iraq's financial position, as gold constitutes a sizable and crucial component of the nation's total reserve assets. Currently, Iraq is reported to hold an impressive reserve exceeding 60 metric tons of gold, establishing its position as one of the leading sovereign reserve holders within the wider Middle East region. This significant gold holding, when combined with its massive oil export revenues and other proven natural resources, serves to powerfully strengthen Iraq's underlying financial fundamentals and provide a robust backstop for its currency's value. Financial analysts are increasingly arguing that the Central Bank of Iraq, CBI, is now in a strong position to strategically leverage this robust foundation of substantial reserves to provide a credible and compelling justification for the implementation of a fundamentally stronger exchange rate for the dinar. The core financial principle remains simple and immutable. The stronger a nation's foreign reserves and the lower its overall external debt obligations, the higher the international confidence in the currency's intrinsic stability and its future potential for appreciation. In what is viewed as a nearly perfect financial backdrop for a major monetary reform, Iraq is currently witnessing a concurrent and positive trend of its national reserves steadily rising, while its external debt figures continue to decrease. This double positive scenario is precisely the kind of fundamental strength that international financial institutions look for when assessing a nation's readiness to successfully execute a significant and lasting currency adjustment without creating undue domestic economic shockwaves. The central and most simple question that now dominates every conversation is the elemental when. When will the Iraqi government and its central bank finally decide to implement the long-awaited currency adjustment to align the dinar with its true, verifiable underlying economic value? Public statements that have been officially issued by senior central bank officials indicate that the ambitious project to delete the zeros, a symbolic and highly evocative term meaning the fundamental redenomination and subsequent strengthening of the dinar, remains an active and high-priority national undertaking. This intricate process is far more complex than a simple reprinting of notes. It involves systematically removing excess digits from the currency's nominal value, while simultaneously ensuring that the citizens' essential purchasing power is entirely maintained and protected. It represents a complete, large-scale recalibration of the nation's entire money supply and its foundational exchange relationship with other global currencies, an undertaking of immense logistical difficulty. According to recent highly detailed technical reports, the central bank has already successfully completed all essential system testing, which includes rigorous, AI-driven auditing protocols and comprehensive updates to its digital infrastructure, a necessary step for ensuring compliance and preventing money laundering. Now, once again, the technical apparatus is entirely prepared, and they are merely waiting for the final political signal to officially go public with the new exchange mechanism. Experts interpret this consistent pattern of technical completion, followed by a calculated pause, as an extremely strong and compelling indicator that the stage is not just being set, but is in fact nearly fully ready for the curtain to rise on a new economic reality. The pervasive sense is that every single logistical and technical prerequisite has been fulfilled, transforming the process from a complex technical challenge into a carefully managed diplomatic and public relations moment. To fully appreciate the direction in which Iraq's currency strategy is steering the nation, it is vital to recall its historical financial benchmark. Prior to the severe economic sanctions and widespread conflict that devastated the system in the early 2000s, the Iraqi dinar historically traded at a significant exchange rate, often hovering around $3.22 per single unit, a valuation that was considerably higher than the majority of currencies in the region at the time. The current pervasive discussion about a return to an elevated rate is deeply rooted in this historical reference point and the memory of that former financial stature. However, many modern-day economists specializing in post-conflict recovery and emerging markets suggest that the eventual new value may not precisely mirror this old figure. Instead, their forecasts predict a scientifically recalculated and sustainable rate, one anchored entirely to current economic fundamentals, including the current national gold reserves, total oil output capacity, proven GDP diversification efforts, and the high degree of digital banking readiness that has been achieved. If Iraq successfully manages its re-entry into the global markets with newly implemented radical transparency, robust artificial intelligence-led oversight mechanisms, and an increasingly diversified array of non-oil revenue streams, its new exchange rate could theoretically rival, or potentially even exceed, its previous historical standing. The International Monetary Fund (IMF) recently released compelling long-term projections, suggesting that Iraq is firmly on track to become the fourth largest Arab economy by the year 2030. This optimistic and official forecast is a clear and direct reflection of confidence, not just in Iraq's massive and proven oil sector, but crucially, in its broader economic potential and the success of its ongoing structural reforms. New large-scale infrastructure investments, comprehensive technology integration across public services, and increasingly effective efforts to significantly reduce deep-seated corruption are all incrementally transforming Iraq's international perception. This transformation is shifting Iraq's global image from that of a struggling, post-conflict economy to that of a forward-looking, strategically vital hub for regional energy and international trade. The IMF's public recognition of this momentum is far more than just a symbolic gesture. It directly influences vital factors such as sovereign credit ratings, the volume of international investment interest, and the subtle internal dynamics of foreign exchange trading. When highly influential global institutions officially label a nation as a burgeoning power or a rising market, the world's major financial systems begin to quietly align their infrastructure and expectations in the background, preemptively positioning themselves for the change. This is precisely why many sophisticated analysts believe that Iraq's genuine, long-term economic fundamentals are demonstrably stronger and more resilient than many within the general public currently realize. Beyond the important assessments of the IMF, numerous private sector financial analysts have also proactively highlighted Iraq's surprisingly unique and often overlooked technological advantage. Over the last several years, Iraq's national banking sector has quietly undergone a period of intense and comprehensive modernization, successfully integrating cutting-edge AI-driven compliance systems, fully digital identity verification protocols, and secured blockchain-linked payment channels. These transformative and sweeping technological upgrades mean that Iraq now possesses one of the most robust, secure and transparent banking frameworks currently operating within the entire Middle Eastern region. Such advanced capabilities are indispensable prerequisites for a fully compliant re-entry into the sophisticated global markets. Genuine currency reform in this modern era is fundamentally not just a simple administrative exercise of printing new money. It is entirely about guaranteeing that every single transaction can be instantly and verifiably audited, securely logged, and protected from any attempt at manipulation or illicit activity. Iraq's quiet yet resolute digital transformation has succeeded in impressing even those skeptical observers who once held significant doubt regarding its ultimate readiness for such a large-scale, modern financial pivot. Naturally, not all financial commentators and analysts are in complete agreement regarding the precise timing or the specific methodology of the implementation. Some experts strongly believe that any substantial, large-scale revaluation is more likely to be a managed, gradual process rather than an abrupt, sudden shock announcement. This managed float model would strategically allow the Iraqi currency to slowly and organically adjust its value within a predetermined, controlled range, effectively mitigating the risk of inflationary shockwaves impacting domestic prices and the cost of living. Conversely, others argue compellingly that the Iraqi government may decidedly prefer a single, one-time rate reset, strategically timed to coincide with the official unveiling and implementation of its next national fiscal budget. There are even unconfirmed reports circulating that the current, confidential draft of the national budget contains intentional placeholders, blank spots where the precise new exchange rate numbers will eventually be officially inserted. If these reports prove to be accurate, this would strongly suggest that the government has already fully designed and prepared the administrative and financial mechanism for a future rate change, but is strategically waiting only until all crucial political, regional, and technical factors align perfectly before inserting the final, definitive figure and making the monumental announcement. As we meticulously examine the broader regional and global context, it becomes overtly clear that Iraq is not executing these transformative moves in political isolation. A multitude of Middle Eastern economies are actively and visibly aligning themselves under a series of new, far-reaching trade agreements and advanced digital finance frameworks. Significantly, a growing number of major cross-border settlements are now being systematically conducted in local currencies rather than the universally dominant US dollar, signaling a collective shift toward economic self-reliance. Iraq itself has already taken a highly visible step, effectively declaring the use of the US dollar illegal for many forms of domestic transactions within certain regions, an action that forcefully reinforces the national dinar as the singular legal tender within its borders. This concerted strategic movement toward a greater degree of financial autonomy represents a significant step in reducing the nation's historical and pervasive dependency on foreign currency dominance. Once the Iraqi dinar achieves full, unrestricted tradability on the highly competitive global Forex market, its true value will be determined entirely by genuine supply and demand dynamics, rather than being held artificially in place by administrative caps or government decrees. This fundamental transformation is expected to redefine the entire scope and nature of its national economy for decades to come. Financial historians and experts frequently draw compelling parallels between Iraq's current position and the historical turnaround successfully executed by Kuwait. When the Kuwaiti dinar was officially reinstated after its crisis decades ago, it rapidly ascended to become one of the strongest and most valuable currencies in the world, with a valuation now standing at well over $3 US dollars per unit. Given that Iraq's overall natural resources, encompassing both its massive oil reserves and its untapped mineral wealth, far exceed those of Kuwait, some analysts hold the view that a similar, if not even greater, recovery and appreciation is theoretically achievable, provided that sustained political will and stability are maintained. Yet, a cautious segment of analysts advises that Iraq must first definitively ensure a verifiable foundation of sustained political stability, a demonstrable track record of reliable infrastructure development, and a continuous high level of international financial confidence. The observable historical pattern suggests that Iraq's definitive future currency value will ultimately not be determined by fleeting speculation, but entirely by its demonstrable and sustained readiness to operate within global norms. Across nearly all major financial media platforms, the specific conversation surrounding the mechanism of the dinar's float has grown noticeably louder and more detailed. Some highly placed insiders are now claiming that Iraq may choose to skip the traditional, multi-stage floating process entirely, opting instead for a direct launch at a predetermined, elevated rate after which it would then permit gradual, fully market-driven adjustments to take hold. This bold theory stems from previous official statements suggesting the government's strong desire to completely avoid any significant market volatility during the highly sensitive transition phase. If the dinar were to enter the Forex market with substantial governmental backing and an immediate appearance of stability, it would project an invaluable sense of confidence to the entire global investment community from day one. In such a carefully orchestrated scenario, its official Forex visibility, the precise moment at which international traders can finally see and transact the dinar on their terminals, would effectively serve as the official and definitive public launch date. The observable systematic synchronization of the market infrastructure strongly hints that the underlying technological platform for this might already be fully live and operational, but is merely being intentionally shielded from general public view until the political signal is given. In the interim, the most vital indicator of imminent change is the internal activity within Iraq itself. Both Iraqi citizens and local businesses are reportedly engaging in visible preparations for the impending change. Regulatory auditors have significantly tightened compliance regulations and oversight mechanisms. Importers are diligently recalculating their long-term contracts based on various potential new rate scenarios. And regional trading hubs are reporting a noticeably higher volume of serious inquiries regarding the complex logistics of large-scale currency conversion. These are all undeniable signs of profound domestic anticipation, though they do not constitute official confirmation. Yet historically, these same patterns of widespread proactive preparedness have consistently preceded major monetary reforms in other nations. The unique combination of palpable local readiness and the continuous high-level international diplomatic silence is creating a quiet, yet powerful tension. Everyone within the specialized circles senses that a significant event is drawing near, but no single entity outside the highest echelons of power can state with certainty the exact moment the final switch will ultimately be flipped. One consistently overlooked, yet highly significant factor in this entire complex dynamic is Iraq's accelerating alignment with global energy transition policies. the nation has actively commenced making substantial investments in renewable energy projects and is strategically diversifying its national export base far beyond its historical, singular reliance on crude oil sales. This critical move toward revenue diversification is a key stabilizing element for the national revenue, which is a fundamentally non-negotiable component for ensuring sustainable currency strength. When a nation's primary income sources are broadened across multiple sectors, its currency becomes inherently less vulnerable and less susceptible to the sudden shockwaves originating from a single sector economic downturn. The IMF has publicly commended Iraq's progressive efforts in this crucial area, specifically noting that sustained diversification has the potential to dramatically accelerate long-term economic stability and provide the essential structural support for achieving higher currency valuations in the years immediately ahead. While the bulk of both media and institutional attention is understandably focused on the observable actions of governments and major financial bodies, the subtle collective behavior of individual investors also plays an indirect role. Across numerous online communities, speculation, rumor, and outright misinformation run rampant. This makes the critical separation of verified factual economic indicators from unsubstantiated rumors more vital than ever before. Genuine, successful monetary reform in any nation follows a recognizable and proven pattern. Demonstrable transparency improvements, credible external audits, comprehensive fiscal budget restructuring, and achieving full global compliance checks. Iraq is widely acknowledged to have completed nearly every one of these essential compliance milestones. While this impressive achievement does not in itself guarantee a specific date for the revaluation, it undeniably signals a powerful and sustained momentum that has become increasingly difficult for global financial observers to ignore. As seasoned analysts often remind us, markets consistently move first on subtle whispers, and those whispers emanating from Baghdad and international capitals are growing noticeably louder with each passing day. Global institutional investors are also closely and attentively monitoring the monetary policy decisions emanating from the United States. Should the Federal Reserve signal a decisive shift toward a significant rate cut in the future, the dollar's relative value would likely soften slightly across the board, a dynamic that would indirectly provide a significant relative boost to the valuation of nearly all emerging market currencies. This financial dynamic could strategically work to Iraq's distinct advantage if its highly anticipated revaluation is carefully timed to coincide with such a predictable global shift. Timing in this context matters more profoundly than ever. Strategically releasing a new, strengthened exchange rate during a moment of deliberate dollar weakness would effectively amplify Iraq's international purchasing power and significantly increase its overall global competitiveness. This is precisely why observers so often link Iraq's potential revaluation timing not just to internal milestones, but to the broader, often predictable global monetary cycles, treating it as a calculated element in a much larger, global financial equation. It is also crucially important to continuously remember that the entire Forex market operates heavily on an intricate blend of perception, credibility, and sustained confidence. International traders are essentially betting on the future trajectory of currencies, making their investment decisions based on their calculated assessment of factors like a nation's political stability, the absolute strength of its central bank reserves, and its projected future economic growth potential. If the Iraqi government consistently demonstrates credible financial control, unwavering transparency in its dealings, and a strong, cooperative relationship with all major international institutions, global investors will inevitably begin to treat its dinar not as a high-risk gamble, but as a calculated and significant long-term opportunity. In the complex world of financial markets, this carefully cultivated positive perception has a way of rapidly transforming into an undeniable financial reality, and Iraq appears to be successfully and systematically rebuilding that vital international perception from the very ground up, one credible reform at a time. As we bring this detailed analysis to a close, the foundational question remains suspended in the air. Will the grand moment of revaluation occur in a sudden, dramatic flash, or will it be permitted to unfold gradually, one strategic step at a time? The undisputed truth is that no entity outside the highest, most guarded levels of authority in Baghdad and the relevant international capitals possesses knowledge of the exact, final timing. However, the indisputable convergence and powerful alignment of all the most critical economic, geopolitical, and technological signals is now stronger and more concentrated than at any point in the past decade of observation. With the technical infrastructure demonstrably ready, the essential Forex integration actively running in the financial background, and major global institutions officially forecasting Iraq's definitive economic rise, the collective momentum building toward a major shift is now undeniable. Whether this profound currency shift ultimately occurs tonight, next month, or later within the next year, one central fact is absolutely clear. Iraq is no longer a static economy waiting for help. It is actively and demonstrably preparing to re-enter the global financial stage with a national currency and an economy that are finally poised to accurately and sustainably reflect its enormous true potential. In the end, this entire monumental story is not simply about shifting numbers or exchange rates. It is about a fundamental national transformation. From the long dark shadow of years of profound uncertainty to the bright new dawn of digital financial innovation, Iraq's enduring journey is a powerful symbol of deep national resilience. The nation has decisively moved past the difficult phase of reconstruction and is now fully in the phase of tangible readiness, shifting from economic isolation toward a powerful, necessary integration. And as the entire world watches this meticulous final preparation, one fact becomes powerfully clear. Every single major, transformative financial era in history begins quietly, and then all at once it arrives. For Iraq, that defining moment may in fact be closer and more imminent than virtually anyone currently realizes.